What's going on? How's everybody doing? Welcome. Let me make sure this microphone is working well. We'll get started in just 1 second. All right. Sweet. We live? We live, Cat? Yeah. It's the mic's working. Are we live on these two? TikTok, Instagram. Where are you guys watching from? Twitter? Where y'all tuning in from? Can you build real estate? Can you build wealth through real estate where you're at? Can we make this where it's not so blurry? Where are you guys watching from? Opportunity City? You're just not going to be able to read what we got up here. All right, welcome everybody. So if you missed it, we put on a webinar last Saturday where we talked about how to invest in real estate with no money. For those of you who joined the webinar and those who took advantage of the deal that we offered, congratulations on getting your VIP ticket to the Entrepreneur Real Estate Workshop that we're putting on in April. And also congratulations on taking advantage of the discounted wholesale course for getting started in your real estate investment education, taking that first step. And now all you got to do is get out there and get busy and start making some wholesale fees. We put these webinars on every month. We'll have one coming up at the end of this month as well. And these webinars are great. I mean, it's a good time for you to come and learn. This one was on a Saturday. So congratulations, everybody, again. And we covered a lot of valuable information. We talked about how to find deals and take them down with no money, buying them subject to, negotiating seller finance deals, wholesaling deals, finding partners, and everybody there who paid attention, took good notes. I know y'all got a lot of stuff out of it, so thank y'all for coming. All right. So today we're talking about how to build wealth through real estate. Apologize, it's kind of hard to read this over here, but we're going to do our best to make it a good experience for you guys. All right, so why real estate? Why wouldn't you just invest in stocks, or why wouldn't you invest in bonds, or open up a CD account at your local bank? Why would you want to invest your money in real estate? Well, there's a few reasons why, and we're going to cover them today. But I want to hear in the comments, why do you think real estate versus everything else? We're going to cover a lot of valuable information today, so make sure you take notes, get a pen and paper, and let's dive in. What's up, Twitter Spaces? All right, so why would you invest in real estate? Real estate. What's the stock market done this year? How has the stock market performed? What's the S&P 500 done over the last 12 months? Let's look at the SPY. SPY is an ETF trust that follows the S&P 500 index. And over the last 12 months, SPY is down 9%, give or take. Majority of stocks are down right now too. Tesla's down, Apple's down, Facebook's down. Is Snap up? Amazon, Tesla, Goldman Sachs posted the worst earnings miss in over 10 years last week. Dell, BlackRock, stocks haven't performed very well over the last 12 months. But here's the reasons why you would want to invest in real estate. So number one is cash flow. So There are some dividend paying stocks out there. They'll pay you a cash flow every quarter, or sometimes they pay monthly or annually. But with real estate, you want to buy assets that provide cash flow. This cash flow is money that'll pay you every single month. If you have good management in place, you have a good property in a good location, you got good tenants, you got good debt, you bought at the right price, you got rents raised up to where they should be. Real estate should be paying you cash flow, and cash flow is extremely important, especially right now. While property values have been decreasing in value over the last nine months or so after we hit our peak, you don't want your property to be decreasing and depreciating in value, and you're losing out on cash flow every single month. But real estate will provide cash flow for you if you buy the right properties. Second reason is appreciation. You want to buy in good markets like Austin, Texas, Nashville, Tennessee, Denver, Colorado, South Florida. We buy mostly here in Austin, Texas. Appreciation. So if you're buying good in good markets and good locations that have demand, they have a shortage of housing, they have growth, they got jobs coming, your property value should be appreciating. So you get cash flow and you get appreciation. What's the third reason why real estate is the way to build wealth? 3, can you guess it? It's leverage. So I only have to put down 20-25% of my own money to buy real estate assets. The bank is going to give me the remaining 75%. 80%. I put my 25% down, get a loan from the bank. I pay my mortgage payment every single month. The tenants are going to be paying me rents. That is going to pay my debt. It's going to pay my operating expenses. It's going to pay for everything. And like I said, if I have a good asset in a good location that gets cash flow and appreciation, utilizing good leverage will allow me to multiply my investment. So leverage is the other reason. Number 4, depreciation. Why is depreciation important? Why do you want depreciation? Well, you don't want the value to actually depreciate, but what you want is you want to depreciate your asset when you're filing your taxes for the IRS. So the IRS allows you to depreciate your real estate assets that you own. There's residential and commercial straight line depreciation. And you can also utilize things such as cost segregation studies to accelerate the depreciation to take as much of a loss on this as you possibly can in the first 3 to 5 years. Now, why would you want to do that? Why would you want to take a loss on the books for your real estate investment? Well, so you don't have to pay taxes on the gains that you get. So this cash flow right here can be offset by depreciation. So you get your cash flow coming in, cha-ching, cha-ching, cha-ching. And then at the end of the year, when you're filing your taxes, you are going to depreciate that real estate asset, and all that cash flow you built up and your depreciation brings it back down to even, or sometimes even negative. Therefore, you pay 0 taxes. That should be the goal on the income that you get from your real estate, passive income, like Jeff Tyson says. So cash flow, appreciation, leverage, depreciation, they're the things that make real estate one of the best investments out there that you can take advantage of. So how do you go out there and how do you take advantage of it? Well, you need to get the education. You need to get the knowledge. TikTok, Instagram, Facebook, YouTube. Is that what y'all are doing here today, getting the knowledge? Did we get any comments over here?
Yeah, how about them interest rates?
What about them? Yeah, how about them? They're great. They're making the purchase price for these assets much, much, much lower. Listen, you could try and build some wealth through real estate without using debt, but you're going to go much slower. I mean, let's say you want to buy a house that costs 400 grand. Anybody here have 400 grand saved up? If so, it's worth a lot less because you're holding on to it. You need your cash out there performing and growing in assets that are going to appreciate and provide cash flow for you, provide returns for you. You don't want to sit on your cash. All this hoopla about inflation and interest rates and all this stuff is because your cash is losing you money sitting in your bank account. You need to invest it. So yeah, interest rates are higher. Last couple of years, they were dirt cheap. They were the lowest, probably the lowest they'd ever been since the 30s, the 1930s. And yeah, interest rates are up right now. Probably looking at about 6.5%, 7.5% interest rate, depending on where you're at. That's right, Jeff. Put your cash to work for you. So anyways, if you wanted to avoid getting debt, and if you wanted to avoid paying interest on loans, then sure, you could buy your properties cash. But you would have to save up the 400 grand to do so, or however much the property is that you're looking to buy. And then to buy your next one, you'd have to save up 400 grand again. What's the stat? Most people here in the United States don't even have $1,000 saved up, let alone 400 grand to go out there and buy properties cash. But it is possible. However, if you want to grow and if you want to expand and if you want to multiply your investment, utilizing good leverage is the way to go. And you don't want to get debt that's going to cost you more than the return that you're getting. So you don't want to lose money. But that's why, again, you look for properties that cash flow, even with the debt, even with the higher interest rates, that are in appreciating markets. You're getting good debt on them, and you're going to take advantage of depreciation that the IRS allows you to do. So these are the main 4 reasons why you should take advantage of building wealth through real estate. So we're going to talk about debt today and the power of debt and how you can build wealth through real estate by utilizing those 4 main principles that I just covered. We have any more questions?
No, since I don't worry about interest, you'll be able to refinance.
Yes, you can you can refi. All right, so let's run through an example here. I'm going to show y'all the beauty of real estate and how you should be taking advantage of it and why. All right, so let's say here's an example here in Austin, Texas. Let's say I go out and I buy a duplex here in Austin it's a duplex for $350,000. It is a 3-2, 3-bedroom, 2-bath on each side. Let's say approximately it's about, 2,100 square feet total for the entire thing. And it is renting out for $4,000 a month, $2,000 per side. All right. Have y'all heard of the 1% rule? TikTok, Mr. Interest Rate, what's the 1% rule? Kat, do you know the 1% rule? Even though we've said it 2 million times.
1%.
Can we zoom in just a little bit here? So the 1% rule means that if you're buying a property for $350,000, you want to be able to get, sorry, it's all blurry now. You want to be able to get at least 1% of the purchase price in rents. So if you're buying it for $350,000, in order to meet the 1% rule, you want this property to rent out for at least $3,500 a month. There you go. That's perfect. So in this case, we're actually above the 1% rule. We're buying it for $350,000 and we're renting it out for $4,000, and that puts us at the 11, times 100. That puts us at the 1.14% rule. The higher you get that, the greater the cash flow. It's okay that it's cutting off my head. This is the most important. So we're getting $4,000 a month in rent. Let's run through some numbers here. So I'm going to put down 25% is my down payment. I'm going to get 75% of it loaned. All right, what's 25% of 350? 350,000 times 0.25. That puts me at 80. Let's just call it 88. It's 87,500, but we're going to call it 88,000. And my loan is going to be 262. No debt over there, high interest rates. He or she, he only got 100,000 saved up. He can't even buy this property. So they're gonna have to keep sitting on the sidelines. Only got 100 grand saved up. But hey, if you got 100 grand saved up, or if you even if you don't have 100 grand, go find some partners, scrape together 88,000, put 25% down on this deal right here. 350 grand duplex, 3.2, 2,100 square feet, renting out for $4,000 a month, $2,000 per side. We're going to put down $88,000 on the down payment. Our loan's going to be $262. And let's run through this. I don't want to go too far. So let's run through here. So on this property, our annual income on it, assuming it's rented out 100% of the time, our income is going to be $48,000, right? 4,000 times 12, $48,000. Let's say, let's run through our operating expenses. Y'all know what operating expenses are? Your operating expenses are going to be things like management, taxes, insurance, repairs. All right, so management's going to cost me about 7%. 48,000 times 0.07 puts me at 3,360. That's how much I'm going to pay in management every year. Taxes, let's just call it 4,700. Property taxes, gotta pay the city, county. Insurance, let's call it 2,500. Repairs, let's say we spend $100 per unit per month, so we're gonna call it $2,400 a year in maintenance and repairs. So my total operating expenses, 3,360 plus 4,700 plus 2,500 plus 2,400. My total operating expenses are going to put me at, let's call it 13. We're going to round up $40, and it is going to be $13,000 a year in operating expenses. All right, so that's going to give us net operating income of 48 minus 13, $35,000. $35,000 is our net operating income. But Mr. Interest Rates, we're not going to be able to keep all that money because we do have debt on the deal. So what was our principal balance on the loan? 262, right? Yep, 262,000. Let's say we got it at 6.5% interest only. 262 times what did I say, 6.5 or 6 times 0.065. All right, so my debt, guess what my debt's going to cost me? My debt's going to cost me $17,000 a year in interest only debt payments. Nothing's going towards principal. That's okay. We don't mind. And the difference between my NOI, which is my income minus my expenses, gives me my net operating income, then minus my debt. This is going to give me the number that I walk away with every year in cash flow. Cash flow all the way down here at the bottom is, anybody know the number? Are you taking notes? $18,000. All right. So let's do a little math here. 48,000 minus my expenses gives me my NOI minus my debt gives me my cash flow. How much do we put down? 88 grand. I think we put down 88 grand. So let's see, 18 divided by 88. Dang, this is crazy. Y'all are going to get paid back your money in 5 years if nothing changes with this property. This is I don't want to keep killing trees with all this paper. This is a 20% cash on cash return. 18 divided by 88. It's a little bit higher than 20%. It's like 20.4% cash on cash return. You can get paid all your money back in less than 5 years just from the cash flow. Because remember, you're only putting that 25% into the property. Can y'all go get a 20% return anywhere else? That's also assuming this doesn't appreciate. That's also assuming you don't raise rents next year. That's also assuming nothing changes with the property. You're going to get paid 20% year over year over year over year. 20% on your money until you get paid back. Then you got no money in the property. And at that point, it's an infinite return. You can't quantify it. You've already been paid your money back. You got $0 in it. So you're getting paid infinite returns on this property. Now, let me show y'all something really cool and why you want to utilize debt is, let's say you hold on to this property for 5 years and you got paid all your money back via cash flow every single year. That's $18,000. Income minus expenses gives your NOI minus your debt gives you your cash flow. And hey, in 5 years, y'all think interest rates are going back down, or you think they're going to keep shooting up 18+%? I'm willing to bet you in 5 years interest rates are lower than they are right now, or relatively the same, but not much higher. But let's say they are lower. Let's call them right now 6.5 is what I ran this at. Let's say 5 years from now we can get a 4% interest rate. And also, let's say that property values have increased since then. So now this duplex that I bought 5 years ago for 350 grand in a great market like Austin, Texas, let's say it's now worth 500 grand. It appreciated. People kept moving here. Jobs kept coming here. Elon started another company here. And property values kept increasing in value. So now we got a property that's worth 500 grand. And I'm like, I'm sick and tired of this 6.5% interest rate. I'm going to go refi this property at my new value of 500,000 right here. And I'm going to go to a bank and I'm going to say, hey, look, I want to get cash out refinance on this property. Meaning I want you to cash me out. I want you to pay back the other lender their 6.5% loan. I want a new loan with you at 4% interest. And I want it at this new value of 500 grand. Cool. They send an appraiser out there. It appraises at 500 grand. All right. So the bank runs their numbers. They say, you know what, Mr. Kaufman, we're going to give you 75% of this new value at 4% interest. All right. And we'll give you interest only for the first 5 years. All right. So cool. Guess what the bank's going to give me? They're going to give me a new loan of $375,000. 75% of the new value. Now, this $375,000, this is this is more than I paid for the property in the beginning. I paid $350,000. So I'm going to take this $375,000. I'm going to pay that lender back. Mr. Dooley, this will be 5 years from now. Do you think they'll be at 4% 5 years from now? Or you think they're going to be higher than they are right now? I'm willing to bet you we get a 4% loan 5 years from now. We're looking into the future, Mr. Dooley. We just bought this property. Let me catch you up if you're just tuning in. In this example, we bought this property for $350,000. We got a 75% loan on it, 6.5% interest only. Principal balance is $262,000. You hold on to this property for 5 years. Maybe in 5 years it's worth $500,000 at that point. And the new bank says this is 5 years from now. Maybe the new bank says, hey, we'll give you a 75% loan on the new value, and interest rates are now at 4%. Even if they were at 6%, it'd make no difference with what we're getting at here. So we're going to give you a new loan of $375,000, and we're going to take that $375,000 and we're going to pay back the original lender. They're $262,000. So we're going to pay off the original lender. They're going to get their $262,000, and that's going to leave $113,000 that we get to keep. We already got paid back our money via cash flow on our 20% cash on cash return over the first 5 years. Now we got no money in the property anymore. We're still getting cash flow, and we got a new appraisal and a new loan, cash out refinance. Old lender got paid back, and we get to pocket $113,000 and go repeat the process over and over and over and over and over again. And that's how you create wealth and build wealth through real estate.
Any tips on finding partners for the down payment? Also, will the bank consider your partners in the lending process, or is it solely based on you?
Repeat the last part.
Will the bank consider your partners in the lending process, or is it just you?
They will. Yeah. What do you? So finding partners, you got to get out there. You got to go talk to people. This isn't on Instagram. Can they talk to each other on Instagram? Like, can they see each other's comments and everything? So go talk to everybody in here who's watching this live. Come join our live webinars. Come to our event in April. Go to investor meetups in your area. Go network with people on Facebook. You got to get out there. You got to go meet people. Introduce yourself. Get to know realtors, contractors, hard money lenders. Everybody in the industry. Go get to know them. Go network. Go meet people. Tell them what you're looking to do. Say, hey, look, I'm finding deals. I need someone who's got the cash so that we can go buy these properties. Sell, pitch your vision. Send them the deals that you're finding and see if they want to partner with you on it. But there's so many ways to go out and meet people. You just need to go get out in the market. You got to go meet somebody, and you got to introduce yourself, and you got to network. What else we got?
Invest against gross.
Invest against gross. All right. Cool. So this is how you build wealth through real estate. This is the power of real estate. Oh, and by the way, along the way, that 20%, that cash flow of $18,000 that you're getting, you're going to be able to write all this off via depreciation. The way depreciation works is you don't get to write off the full value of the property of $350,000. You can't write off the land, but you can write off the improvement. You can depreciate the improvement on the land. So if the total property costs $350,000, let's say I don't know, let's say 60% of it is the improvement. So 350,000 times 0.6. So you get to write off 210,000 of that 350. Not year one. You can accelerate it via cost segregation studies and accelerate the depreciation 3 to 5 years. But you can also just use straight line depreciation as well, and you can write off the improvements of that property. And that'll offset all this cash flow that you're making from it. Therefore, you don't pay taxes on it. Who's excited to build some wealth through real estate? What are you chatting over there?
Networking.
Yeah, you got to go out there and network. Hey, we're partners. If you got a deal and you want us to check it out, submit it on our website, typekeywrealestate.com/submit a deal. Submit-a-deal. Just go to our website, click investors, submit a deal, and submit it there. We'd love to partner with every single person here on a deal. We can buy more real estate together. We got capital, we got the financing, we got the contractors, we got the management, we got the deals, we got the team, but would love to check out some more deals with y'all. Any other questions? This is how you do it. This is how you do it. And let me show you what happens. This is just your first property. I love drawing this graph out. All right. We're going to draw a graph right here. All right. Everybody see this graph? This right here is money. This right here is time. You are right here. Got a little bit of money saved up. You're buying your first real estate investment. You're looking to build wealth through real estate. And this is what's going to happen. The more that you take advantage of that strategy that I just showed you, the more you buy good deals, cash flowing deals, great markets, you get good leverage, you have appreciation on those assets, you get good debt, pull your money back out and go repeat the process over and over and over and over again. This is what's going to happen with your income. So it's going to start out slower. You're not going to start out making millions of dollars, but it's going to start growing, 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 and then it's going to start growing exponentially. The more good deals you buy, the more good assets you buy, the more good debt you have, the more you multiply your investments, the faster it's going to grow, and it starts growing exponentially. It's not linear growth. It's not like you buy one, then this happens, or you buy two, and then you're not growing in a straight line. You start to grow, and your net worth starts to grow exponentially. First year I was investing in real estate, net worth was, I don't know, started off maybe like 40 grand. I had like $40,000 cash. Then at the end of year one, maybe it was like 150 grand. Year two, bought our second deal. Net worth at 300 grand. Pulled our cash out, bought another deal. Year three, we bought a lot. Bought a 8-plex, triplex, duplex, a few other single family homes. Now net worth at like 750. Year four goes up to like 1.5. Year five, 2.5, 3, whatever it is, it starts to compound and grow and grow and grow and grow and grow. It's not linear growth. So it's really important that you buy deals. Let's find it here. That have these 4 principles. These 4 principles are really important. You have to take advantage of cash flow, appreciation, leverage, and depreciation. Because it's one thing to make a lot of money, but half of that's going to go to the IRS anyways. With real estate, you can utilize depreciation to keep most of your money. And one way to build wealth and one way to keep your wealth is to not give it all to the IRS. So you want to keep it. Compounding, baby, that's right. You want to keep your wealth. You don't want to pay it to the IRS. So depreciation is key there. And if you're a real estate professional, I'm not a CPA, but just Google the tax advantages of being a real estate professional. You get to take advantage of more things that other people do not, and it's not just against passive income. All right. Any other questions? What are the four? Did y'all write these down? What are the four key main components to build wealth through real estate? Cash flow, appreciation, leverage, debt. Don't listen to everybody who's scared about yeah, that makes sense. Don't listen to everybody who's scared about interest rates or buying in this market. You just need to buy deals with numbers like this, and you're going to do just fine. All right, guys. Hey, if y'all want to come network, if you want to learn more about this in person, we're throwing a live event. It's called the Entrepreneur Real Estate Workshop. It's going to be April 29th here in Austin, Texas. We got 4 tickets available. You can get the VIP ticket. We're limited spaces. Those are going to run out fast. We've already sold close to half of them. So we started selling them today. So if you want to take advantage of the VIP ticket, it's not that much. It's what, like $297 for a full day event, for VIP access, VIP lunch, VIP networking, exclusive access to resources and other things that the other ticket holders won't get. Take advantage of that. There's executive tickets, general admission tickets. And hey, if you just want to sit at home and watch from your couch, you can also buy a ticket to watch via Zoom. We'll send you a Zoom link. You'll get the recording, but you can watch live in person. This is going to be April 29th here in Austin, Texas, the Entrepreneur Real Estate Workshop. We're going to teach you how to find deals on and off market, how to find partners, how to get financing, how to take the deal from start to finish all the way through. Be 9 to 5, be an intensive day. You don't want to miss this. And most importantly, you're going to learn all this knowledge. We're going to be there, live Q&A. We're going to teach you all these things, get you the workbook to show you exactly how to go through this process to make money and build wealth through real estate. But one of the other most important things about this is you're going to get to network with the other 300 plus people here at the event. You're going to be able to make connections, find partners, be in a community full of entrepreneurs, and go out there and get after it. So if you want tickets to that event, the links are in the bios or in the descriptions. Don't miss it. We're going to sell out fast. Go ahead.
Do you invest in land outside of Austin? Where?
I haven't invested in land outside of Austin. I don't really like land that much. Land doesn't provide that much this right here, baby, cash flow. It doesn't provide that much cash flow. If you got cattle on it or something, but even then, it's not going to be that much cash flow. But we majority invest here in the Austin, Texas area. However, what we will do with land, we don't buy it and hold it ourselves. But what we will do is we'll buy it or we'll get under contract. We'll go find a developer or someone who wants the land. We'll mark it up and we'll sell it to them and make our wholesale fee. But if you got something, submit the deal and let's see if we can help you get it done. All right, take advantage of those Entrepreneur Workshop tickets, and we will see you